Well, welcome to Investor in the Family Radio. This is Brian Bain, your host, and we've got a special guest with us today, Avi Gilburt. Avi, thanks for joining us.
Thanks for having me.
Well, Avi, you've been with us on numerous podcasts and investing summits in the past, so you're no stranger to our audience and always a fan favorite, at least one that I thoroughly enjoy. And you wrote an article about a week or so ago on Seeking Alpha, just giving your most recent up-to-date in terms of your views on gold. And those are almost always very popular and well-received articles on Seeking Alpha. Sometimes there's some contention in terms of people, have different views as far as what drives the metals and markets for that matter. But do you mind sharing with us where you're at right now in terms of your forward outlook, near-term and long-term outlook on gold?
Well, specifically, as long as the GLD holds over 119 to 120. That's really the key support that we have to hold here. The setup is pointing up towards 145, potentially even higher. Minimally, the first target's going to be 137.50.
Wow. And I'm taking notes. I'm taking 137.50 and potentially higher.
137.50 is my minimal target once we break out. And once you take out 137.50, 145 to 150.75 is going to be your next target region.
145 to 175?
145 to 150.75.
Whoa, gotcha. Okay, I was like, wow, that was a really.
These are just the fibs I have as targets. I mean, to be honest with you, if this really runs the way I think it can, we could be going to 157 to 161 on the next major breakout, and it can happen before the end of the year. The setup is a very strong breakout setup, but we're just waiting for it to trigger. And as long as we hold over that 119, 120 support, the setup can trigger over the next couple weeks.
Wow. Okay. And so what we're going to do is, again, I'm taking notes here over next. Okay. So obviously, people hear this and people are going to, there's always, you've heard the story a million times in comment sections and other conversations. People are going to say, well, what about this? Well, what about that? And they're going to talk about interest rates and Fed, and this is late May 2018, so they're going to talk about Italy and all that kind of stuff. And I know your response is going to be, correct me if I'm wrong, none of that matters because it's all sentiment is what drives price. And obviously that's where you use Elliott Wave to help you determine sentiment and future price movements. And that's a simplistic way of describing it, but does that sound fair?
That is very fair. And I've been through this so many times already. I'll never forget when I was saying to people right after QE3 was announced and we got that initial pop after QE3, I told all my subscribers, and then I wrote public articles, that now is the time to short the metals because we're about to hit a large decline. People thought I was nuts. One person even said to me that you were about to ruin your career as an analyst. I'll never forget that.
Hey, I apologize. Leave me alone. I'm kidding.
Yeah. But, none of that really matters. At the end of the day, it's really just an excuse. People were telling me when I saw us bottoming in late 2015, people were telling me, well, interest rates are about to go up, so gold's about to get killed. I'm like, well, that's not what I'm seeing. People say different things, and it really goes back and forth. Sometimes they'll say interest rates are bullish gold. Sometimes they'll say interest rates are bearish gold. To me, none of that makes a difference. To me, it really is just a matter of how investor sentiment is set up. It's funny because I was just writing an article, and I reminded myself of a quote from Alan Greenspan. And he noted in front of Congress that markets are driven by, as he put it, human psychology and waves of optimism and pessimism. He didn't say they're driven by economics or fundamentals or anything like that. He recognized it's all driven by human psychology and waves of optimism and pessimism. That's all. It's really a lot more simple than most people view it.
Well, and I remember, you and I did our last interview is probably, 4 or 5 months ago, and we discussed this as we typically do. Some of it because I'm a slow learner, and some of it just because it's just necessary, I think, because obviously your approach differs from, I'd say, the majority of the people that I interview. And, again, the idea of sentiment driving price, and I can't remember the exact nature of the conversation at that point, but I came back and was like, I remember I gave some different popular investing quotes as far as, in the short term, the market is a voting machine. In the long term, it's a value machine, or what, all that stuff. And you kept coming back like, nope, that's not true. That's not true. And I was like, well, wait a minute. And we kept going back and forth, and I thought about that a lot since then. And I really am in a place of realizing, it's really hard to argue with the fact that sentiment is what drives things. Obviously people are going to say, you can get into what's driving sentiment, and that's a whole nother conversation. But even someone who says they're a fundamental investor is still subject to sentiment, because if you're investing on fundamentals, your assumption is that eventually sentiment will catch up to what you believe the fundamental value is.
Pretty much. Fundamentals lag sentiment. Sentiment leads everything. And ultimately, that's why people have noted, even famous economists have noted, that, markets will often top even though the fundamentals look great. Same thing with stocks. And the same thing at bottoms. The fundamentals look the worst when the markets bottom. For example, remember in March of 2009? People were convinced that we were heading into a massive depression. The fundamentals were at the worst in recent history, but the market turned up quite strongly. How did that happen? It couldn't be fundamentals. The fundamentals were at the worst at the bottom. So fundamentals often lag the market.
And so with gold specifically, you've mentioned in the past, and you did again just now, that back when metals were topping several years ago, you were turning bearish, and then around 2015 or so, late 2015, when a bottom appears to have been in, at least in recent years, you were turning bullish again. And I know that, we've done interviews a few years ago when you've talked about your long-term views for the metals in terms of, 10, 20, in terms of decades. And you compared it to the bullish call that, what's Elliott's first name again behind Elliott Wave?
Ralph Nelson Elliott Wave back in 1941.
Exactly. And you told the story about, back in 1941, and he had an amazing bullish call on the Dow, correct?
Yep.
And
he was looking for a 70-year rally in the Dow back in 1941.
And you've compared the setup you see Elliott Wave giving you now in gold, you're comparing it to that call back in 1941. Pretty much.
The setup is pretty similar.
Again, I'm pausing for notes here real quick. So can you talk, so back in 2015, you talked about a low being in, or you started turning bullish again on the metals. And obviously Elliott Wave is, not a magic time machine in terms of, or as some may call it, a crystal ball as far as exactly what's going to happen. You look at the waves and you try to make adjustments as sentiment adjusts, I guess is the way it works. But I know that you've been looking for a breakout for, a year or more. And so for people who aren't a part of your service and maybe they just see a free article now and then, they're going to see this and think, oh, there's Avi Gilbert with his big bullish claim on gold. What happened last year, Avi? You've read the comments a million times.
Of course. So, it's funny because people used to take me to task between 2011 and 2015 for being too bearish. Now people are taking me to task for being too bullish. And to be honest with you, when I looked at the pullback that occurred into the end of 2016 in gold, right then and there, we started developing the setup for the major breakout. And once we hit the consolidation that ended in the middle of 2017, the market was ripe right then and there to see a massive breakout. The setup is still in place. It's just now taken an extra year and further sideways action in the market. But the setup has been there ever since a year ago. So nothing has changed in my perspective other than the market has just been simply going sideways. But the setup still remains. And as long as we hold that 119, 120 region, that setup is pointing to a potentially powerful rally out of this. Again, that's why the 119, 120 region is so important, as long as that holds.
And if that doesn't hold, how does that affect your views?
Well, it could change when we break out, and it could even open the door to a lower low in the complex. Not my expectation at this point in time. I think the lows have been struck already.
That's encouraging. So if 119 gets broken, could change when the breakout comes, and could potentially lead to lower lows, but not likely.
That's it's not my expectation right now, but it does open that door. I mean, the probabilities of lower lows right now, I would say, are less than 20% in the entire complex for gold, for example. If we were to break 119, 120 right here and now, it would increase it by another maybe 10 to 15%. It would definitely increase the probability of potentially getting lower lows. But for right now, I think the lows are pretty much in.
So obviously, you're not giving investing advice or that kind of thing, but how, whether how you like to take advantage of it or the best opportunities you see. So with this setup happening, like, what are some of the best ways to take advantage of this opportunity?
Well, ultimately, anybody who's a long-term investor really should be buying actual hard assets, hard gold and silver, something they can actually hold in their hand. I do not view GLD or SLV as long-term holds based upon the way they're structured. I just don't have a lot of confidence in them for the long term. But for anybody who's into this for the long term, I would highly suggest you actually buy the physical, or some high quality gold and or silver stocks.
And which would mean like miners and things like that.
Correct.
Right. Do you have any favorites that you like to talk about, or do you normally go with ETFs, or I guess it just completely depends?
Well, we analyze, and we have an Elliott Wave Trader miners portfolio, which we actually rolled out. We actually put it together and rolled it out in September of 2015 as we saw the bottom approaching. So we will buy and trade them, and we'll often ride one until it reaches its target, and then rotate into another one that's lagging. So it really depends on the moment as to what we like the most. We do a lot of rotation based upon which is leading and which is lagging.
Is that service you're describing right there, is that included in the marketplace service and seeking alpha, or is that's something that's elsewhere?
Something on my other website,
Gotcha.
Elliott Wave Trader.
Gotcha. But you do discuss the metals and gold and silver.
Absolutely, and I even discuss ABX in my marketplace service
Gotcha.
on Seeking Alpha.
Great. Well, is there anything else regarding gold that I haven't asked or you want to discuss that I've missed?
Well, what I can say is, should we get the breakout and we move strongly through that 137.50 region, I think, and then ultimately up to the 156 to 161 region, your support then will turn down to the 145 region, and that's going to set up a run into 2019 back up towards the all-time highs. So that's why I'm saying the breakout setup, the setup in place is extraordinarily powerful, that within a year we could potentially see the all-time highs again based upon the structure. So that's why I keep reiterating the setup is extremely powerful, but we actually need to see the market follow through.
Right. And technically, it looks like that could be now, but just like in 2017, the setup was there. We could do this interview a year from now, technically, or I should ask, could we do this interview a year from now and be like, well, the setup is still there, it just hasn't happened?
I would be very surprised if the setup was still in place in a year from now. I would be very surprised by that. I think the chances of that happening are low.
Gotcha. And Walgo, you mentioned that if the breakout comes and moves strongly through 137 region up to 156, 161, you said the support then turns down to 140.
144, 145 will then become your support, and as long as that holds on all pullbacks, we're likely going up to back up to the all-time highs.
Right. And do you make? Are you able to make projections like beyond that, or is that kind of that's too far out
sure.
to really have a lot of accuracy?
Oh, absolutely sure. once we get back up towards the all-time highs, I think we're going to pull back again, back to that initial target that I gave you, the 156 to 161 region. So we'll pull back to there again, and from there we'll probably exceed the all-time highs as we head into 2020.
So all-time highs likely in 2019, then pull back to the 150s.
We can test if we get the breakout, then we will likely test the all-time highs in 2019, and then pull back again later in 2019, then ultimately take out those highs in 2020.
Gotcha. And any kind of pullback in 2019, you're looking at probably like the 150s region, most likely.
For 2019?
Yeah, after you said test all-time highs in 2019.
After we test the all-time highs, I'm looking for a pullback towards the 156 to 161 region.
Gotcha.
And then beyond that in 2020.
Gotcha. And so when would you, are you able to look at your modeling and say, okay, I expect $5,000 gold around this period of time? Or, because the big numbers you hear people throw out are $5,000 gold or $10,000 gold. Are you able to project if those breakouts come in the time frames?
Well, I'm not going to go into specifically as to when 10 years from now will be. What I can say is, based upon the structure that I'm seeing, I can easily foresee a 50-year bull market taking hold in the metals complex.
Gotcha. That's fair. I'll take that as positive.
Yeah.
Excellent. Well, hey, Avi, man, it is always a blast to talk to you about your views on gold and silver and really any of the markets in general, because I just appreciate the different angle that you bring and your focus on sentiment, because as we mentioned before, I agree that sentiment, it's hard to come up with an argument where sentiment is not a or the major driver of price. And I appreciate you giving us some of your time here today.
Thank you very much for taking the time to chat with me.
Absolutely. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.